Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, September 26th, 2025, and here is everything you need to know as the markets close for today. The Indian markets were rocked by a sharp sell-off, closing out the week on a notably sour note. The Sensex tumbled 800 points, ending at 80,426 and marking a 90 basis point drop for the day. The Nifty skidded below the 24,650 mark, posting a decline of 0.95%. Even the derivatives-heavy Bank Nifty was swept up in the carnage, ending deep in the red and failing to provide any cushion to market sentiment. Market breadth was extremely weak, with the broader indices like Nifty Midcap and Small Cap both plunging over 2% each. The rupee hovered around 88 rupees 70 paise against the US dollar, holding steady within this recent range but failing to offer any respite to equity bulls. The trigger for this widespread rout came from Washington, as US President Donald Trump stunned global markets with surprise announcements of sweeping new import tariffs. These include a 100% duty on branded and patented pharmaceutical products with effect from October 1st, unless manufacturing is shifted to the US. Indian pharma stocks responded sharply to the downside, despite the country's focus on generics, with sentiment battered across the board. IT names and pharma majors like Sun Pharma and Dr. Reddy's were among the worst hit, slumping more than 2% following the tariff shock. Other sectors including kitchen equipment, furniture and automotives also came under pressure due to additional US tariff threats. Persistent foreign institutional investor selling further compounded the slide, as large global funds reportedly offloaded almost 13,800 crore rupees during the week. Bucking the trend, defensive names and select export-focused stocks managed to buck the sell-off, but there were no standout gainers in today's trade, with even mid-cap favorites and recent outperformers getting caught up in the decline. Technically, Nifty has now posted its sixth straight day of losses and breached the closely watched support area around 24,750. Raising the specter of further downside toward 24,600 and the all-important 24,500 support zone. Resistance now looms around 24,950 on any attempted rebound. The Bank Nifty mirrored these bearish signals, breaking through several short-term supports and indicating additional caution for traders ahead. We are now close to the Nifty 200-day moving average, raising a question. Will we see a technical bounce similar to recent lows in August and September, or is more pain in store? Sector-wise, every index finished in the red with IT and pharma leading losses, down 2.45 and 2.14% respectively, under the twin impact of global tariff moves and weak institutional flows. Broader market segments, including auto and consumer durables, also lagged significantly on concerns around sustained FII outflows and weakening global economic indicators. Commodities provided little comfort, with crude oil prices remaining volatile amid growth concerns. Gold slid a bit, but silver is showing strength and inched up. Globally, today's dramatic escalation of US tariff policy under President Trump dominated headlines. These aggressive trade measures unsettled markets not just in India but across Asia and Europe. Investors fear ongoing tariff wars may prolong inflationary pressures and disrupt export-led sectors, putting further pressure on emerging equities. Looking ahead, technical charts suggest a critical zone for the Nifty at 24,500. A decisive break below could open the floodgates for a deeper correction, while a convincing rebound would require a strong close above 24,950. For Bank Nifty, traders should closely watch support at 54,000 levels, with resistance pegged at 55,100. The interplay of global headlines, FII flows and overnight US market cues will likely dictate tomorrow's direction. For all active participants, the call to action today is clear. Remain risk-averse and avoid aggressive bottom fishing until reliable buying support emerges, particularly around the 200-day moving average. Stay nimble, keep a watchful eye on global trade developments, and do not hesitate to tighten stop losses as uncertainty persists. That's all for this edition of What Moved the Market. Have a question or want your favorite stock discussed? Send them in and tune in for tomorrow's morning wrap. Until then, stay informed and invest with care.